Thanks so much for joining us here on a Tuesday. I'm Marlon Bowling with you, keeping a close eye on your ag commodity trade. Boy, it's a downward bias on the grain side of things, that's for sure. Let's go ahead and take a quick look here at our grain trade right now on the corn market first. And as we go to Chicago on the corn futures, we have that September contract still showing a loss, and now it's down 8.5 cents at 362 1/4. You know what? That's a new low for the day. December down 8.5, and that's at 376 1/4. Only one tick from that. And all the attention today is on the soybean trade. Let's take a look. Boy, August down 33. Now remember, that one's in delivery mode now. So we turn to September, and that's down 33 at 966 1/2. Now we have November down at 973 3/4. How far that has fallen already. That's down 33.5 cents on the day. Let's visit with Rich Nelson of Allendale Incorporated in McHenry, Illinois. You know, Rich, before the markets opened up, we had news from USDA that we had sold 100,000 tons of corn to Colombia. I believe that's the second sale announced in 2 days. And the market rewards that by just tanking. They really don't seem to care any less about any export sales numbers right now.
Apparently not. It looks like the trade focus is on this new crop discussion and certainly on the supply portion of the discussion. And right now with the latest updates as far as the model runs, and obviously markets waiting for the next one, which will be coming out in a few minutes. But certainly for right now, looks like extended forecast showing below normal temps and normal to above normal precip. Certainly getting the trade a little riled up here today.
And, you know, I believe we had this discussion yesterday where we were talking about the fact that I've been hearing so many producers saying, well, it's August. The markets have to go up in August because that's when the soybean crop is at a threat. And the counter discussion was, well, the markets don't have to do anything. And, boy, that's proving that in spades here the last couple of days. If the weather forecasts don't support that, I guess you kind of have to give what the market will take you, huh?
It's certainly a very good point. And you know, as far as the key issues on the soybean crop side, you know, we have the pod set numbers for Iowa reported yesterday. There were 52% set pods as of Sunday, in Illinois 50. So this is a very key time of year, certainly for the soybean side. So beneficial weather certainly would provide a good beneficial yield benefit there as well on the soybean side here.
And we were looking at the wheat charts here recently too, and you know, if you look at a Chicago or a Kansas City wheat chart, we are basically, now that we're lower again today, for example, September down about 4 cents on Chicago, we're basically back to where we were before harvest got underway again.
Certainly true. And in terms of the trade focus on this whole wheat issue, we're also pointing out that many countries, in fact, I believe one analyst, ICAR, AKAR, just recently raised up their numbers for the Russian wheat crop itself, now 74 to 77 million tons, and that would be surpassing last year's 72.6. So this issue on the wheat side, maybe the trade's realizing things were not as tight as initially thought just a few weeks ago.
Yeah, I'm glad you brought that up. I just saw a mention on the newswire here just a moment ago before I came in the studio. It said in Russia, favorable conditions are in effect with early wheat harvest reports indicating higher yields than a year ago. So that's not necessarily helping the wheat market out. September Minneapolis wheat right now is down 7.5 cents at 723 3/4. Of course, the spring harvest is currently underway. If we look at the cotton market before we get into our break, we have December new crop. It had been a little higher earlier, but it's starting to feel the pressure now too. It's down 8 points at 68.78 per pound. That's roughly about 60 points off of its earlier high this morning. We'll be back in a moment, and we'll talk more with Rich Nelson of Allendale about our livestock trade when we come back. Big drop in the crude oil today, in case you happen to miss it. It's well over $1 lower. I think we can bring that up once again if we could on the West Texas Intermediate crude prices. Just want to make sure you're aware of this if you're tracking it. The September futures now down $1.72, a big drop at $48.45 per barrel now, and that's almost $2 off its earlier high of the day. We're down within about 8 cents of our low of the day right now. So a big turnaround in the price of crude oil today after it went up over $50 this week. Meanwhile, on the dollar, now that's reversed out, and we had been under pressure earlier. Now we're a little higher, 240 points higher at 92.960 at the present time. Just wanted to point out the crude oil trade because heating oil usually will follow along, and so that could drastically affect what your diesel fuel prices are out there. In fact, our heating oil futures on September are now down 4.5 cents at 162.3 per gallon. Rich Nelson joins us from Allendale Incorporated. Let's take a look at what's going on in the livestock trade today with all the pressure in the grain markets. How do you feel about our livestock futures action?
The livestock side probably fits in with what we should be doing based on what we know as far as news. Bottom line here, we're still seeing some more or less mixed kind of trade on this wholesale beef side, and obviously we're waiting for this next round of cattle supply, which probably is going to start showing up now that we're getting to August. So on the cattle end, I would suggest we still have some low pressure as we find that sweet spot in terms of the year's high supplies still waiting for us in September, October here.
So there's under a $3 spread between the nearby August and the February, for example. August now at 112, that's unchanged. We have October down 23 at 111.72. December down 13 cents at 113.02 per hundredweight. And then if you look at the feeder cattle side, we currently have August up $1.19, 147.37. We have September now 87 higher at 147.52, and October now 70 higher at 146.92. Is that just because of the weakness in the corn, do you think?
I think that's probably a case here for us right now. This feeder cattle side also has a lot of enthusiasm, despite the fact that the live cattle price has been a tough sell for them. Still a lot of enthusiasm right now in the country for these new calves and feeders. Keep in mind here, break-evens for outgoing cash cattle for the month of August will be right around 111 to 114. So for most of these guys on the cattle feeding end, they still haven't really started to lose money here in a serious way just yet.
Lean hog trade, very interesting. We were talking earlier this morning about the spread between the August and the October contracts, how that really narrowed up yesterday by, I believe, 60-some cents. Now, today it's widening back out by $1. So we have August at 79.65. It is under that $80 benchmark. It's down 65 cents, but October dropping $1.62. We're now at 64.40 and on the low of the day as we force our way down, apparently. Rich, this lean hog market, it really seems to be grasping at straws on the way down.
It sure has. And regarding this whole issue, last week's kill was the largest in, I want to say about 10 weeks or so, as we have this seasonal change now going on as far as the supply portion of the picture. And we can certainly expect this to probably continue. The question that we're all going to ask for the next few weeks and whatnot will be this fourth quarter supply, and specifically when or what will be the peak week as far as the actual numbers. So we're all waiting for more or less now this transition from summer, certainly now waiting for the heavy fall-winter supply up ahead.
All right, Rich, as always, great information. Thanks for the insight into the markets. Always glad to hear from you. Rich Nelson with Allendale Incorporated, and he is based in McHenry, Illinois. Big moves in the grain livestock trade today.
Okay, we'll keep watching, see what the day has as it unfolds. Thank you, Markets Editor Marlon Boulding.